So let's start with the one that most people are familiar with, which is the R&D Tax Incentive. Tim, can you kind of, in a nutshell, say what the program is designed for?
It was designed mainly to increase our international competitiveness going way back, and also the highly paid, highly skilled job creation. So the theory, if we've got more companies doing R&D, then we're getting this kind of, skilled labour job creation. So that was really what it was about. To boost economic growth, at the most fundamental level. Yeah. It's delivered through the tax program, and it's a private sector thing. So this is the biggest government program around private sector research. Obviously there's major programs for CSIRO and tertiary education. But this is the number one for private sector.
Yeah, and it's as Tim was saying, it's important to understand it's not a government grant. So it's actually a tax program, but it's duly administered by Oz Industry and the ATO. So you make your technical submission with Oz Industry, and then you actually make the claim via the tax return. So I guess are there any industries that it's not open to?
There are exclusions from being a core R&D activity for things like marketing and research into social sciences and the humanities. So if you are doing research in those sort of fields, you're not going to qualify. So it's a technically or scientifically based program. That being said, a lot of it goes across, it's about 13,000 applicants a year. So by far and away, the biggest sector is software, and software tends to cut across almost all industries. So software development, really helps out. The other big sectors are, manufacturing, food and agribusiness, engineering and resources. They're kind of the big sectors for this. But once you cover software and manufacturing, you've really, you've got a big chunk of the economy.
Yeah, I think that's kind of where it becomes problematic, because it's industry agnostic. Would you be fair to say?
Absolutely.
So yeah. It's open in theory to all and sundry, and then I guess also what we found practically was that because the claims are made through the return, that's not merit based. So it's not a competitive grant. It's just if you qualify, you get funds. Or we'll try to show you how you get those funds. It's a bit difficult to show in theory, but also because it's delivered by the tax system. And I just think because it's a self-assessment system, people would think, well, I'm used to getting tax return, I'm used to whatever I lodge usually being accepted, and that means it's right, which is not the case. And that's kind of where there was a bit of a problem with the R&D tax incentive system. So I mean, there was a situation about 2017-18 where there was a widespread review of most claims. And that's because of some of these cowboy operators, where they were just false or not far. Some of them give benefit of the doubt, just though incorrect claims being lodged.
But there were some, absolutely fraudulent claims as well, which were brought to light, in court cases.
So how I like to understand the R&D tax incentive is based on that definition. How to qualify. We're going to go through eligible activities and expenditure, but if you maybe want to go.
Well, I mean, so just to, the high level sort of detail, the benefit. So if you're a small to medium group of companies, so turnover less than $20 million on a group basis, so there are grouping rules. On a group basis, less than $20 million, you get a higher level of support than larger companies do. So you get a refundable 43.5% tax offset. So, effectively, if you're in a tax-paying position, that really gives you a permanent saving of 18.5 cents in the dollar. So spend $100,000 on R&D, you get a refund of $18,500. If you're in tax loss, because it's a refundable tax offset, you'll actually get a refund of 43.5% of your eligible R&D expenditure. So if you line that up against a merit-based competitive grant program where they're typically on a matching funds basis, so dollar for dollar, you get 50%. By legislative, decree, the R&D will give you 43.5% if you're in that sort of startup loss-making position. So it's a really valuable source of funding. for those.
Yeah, and I think as well, going back to one of my initial points around cash being such a vital element for businesses, what you're basically foregoing is you're foregoing a loss, a tax deduction. So the easiest way to understand it, I think, because it can be a bit complicated when you've got businesses that are in tax-paying position or not. The easiest way to think about it is if you've got a business that's, say, pre-revenue or very little revenue, they've incurred all this expenditure. Ordinarily, if they don't make an R&D claim or if they're not eligible, then they're able to carry forward that loss to the future. So you're getting a future income tax benefit, which is all well and good, except if you never actually generate any taxable income, or if you're not around long enough, then that loss is wasted. So effectively, if we use $100,000 as a good, nice round number, you're basically saying, hey, the $100,000 could save me $25,000 in tax in the future, or you're going to get $43,500 back from the government today, and you no longer can use that $100,000 loss, right? So, and most business, and that helps a lot of things. One helps with, working capital. It might mean the difference between having to bring on investors or borrow money earlier. It's basically makes the benefit available now rather than in the future. So that's why it is a great program if it's done properly. We've already discussed process for making the claim. We said you make a submission with Oz Industry. I think maybe this is the important part because, again, maybe where we've seen some faults are that maybe less than before, but the claim is actually through the return. You get a registration through Oz Industry. What actually gets submitted to Oz Industry then?
Yeah, so you do an R&D application for registration, and that describes your R&D activities. And importantly, it's important that they're described in a way that demonstrates the activities are eligible R&D activities. And that's one of the risk filters that is likely to be triggered. If you do a poor job on your R&D application, you get shifted into a pile by Oz Industry which say, hey, we need to review these guys' R&D application. You don't want to be in that pile because the review can be intensive. It takes up quite a bit of time if you do get one, so it's better to avoid it. And, the rate of actually having claims disallowed is, it's not, they pass most claims, but there is a significant number that they do disallow. So you definitely, if you can, you don't want to get a review in the first place. And that's where an advisor can help you, because we're aware of what they're looking for in an application form, and particularly we're aware of some of the things that trigger them to maybe want to have a look at you. So there's some traps to avoid.
And the initial with Oz Industry, they're not doing an audit, right? When you make the submission.
They're not, but they do a quick read through to make sure that it's complete, and you'll often find that the lower quality applications do get flagged at that registration. So whilst they don't review it and they don't approve it, they just issue you with a registration number. They do a cursory sort of look at it to kind of identify high risk claims.
Again, it's important to understand because I guess sometimes people think once they've made a claim they've had that Oz Industry number, registration number generated, then it's...
That's it. It's approved.
It's approved, and then you get your tax refund, and that also, it's a confirmation that it's approved. So the problems that have arisen with the R&D tax incentive is that it was a bit easier to get approved or registered and get the funds. Typically then when the review, if it comes from the ATO, is like a normal ATO review, can be 2 to 4 years after the fact. After the assessment. And there were these businesses being asked to pay the money back, and also by that stage the money had gone, whether it be in fees or they've just gone and spent it. And there's some horror cases, but business having to go into liquidation. I think the ATO at the time were pretty aggressive and a bit unfair, if we can use that term,
certainly,
in their approach. When some people acted in good faith. So what's the advanced finding? Is that sort of getting certainty around?
Absolutely. Yeah. So what you can do, so the normal process, as we outlined there, is after year end, you make your application to Oz Industry within 10 months about what you already did. You can elect to request an advanced finding from Oz Industry, and this is much more onerous than your typical registration. So unlike, I think we mentioned, getting registered doesn't mean you're approved. An advanced finding, actually, you tell them all about your R&D, and then they make a finding as to its eligibility, and it's for the current financial year and up to 2 following years. So it is actually an assessment of whether or not it is eligible. So if you're doing R&D and for, to secure finance or investment, this may suit you, to have security around the fact that, yes, it's definitely R&D and these R&D offsets will be available, but you have to be highly confident in the eligibility of your activities, because one outcome is that they could find that it's not R&D. So, so we don't see that a lot, actually, to be fair.
Yeah. Here's the infamous case study. I don't know if we're going to discuss it. I reckon we'll skip it. You can read it at your own leisure. The idea is here that there's a business. This is a normal scenario. We've dropped off a few zeros, but a business has income of $250, has total expenses of $150, and of the $150 expenses, $100 would be eligible for R&D, an R&D claim. So without the R&D claim, the business makes a net profit of $100. Then when we come to the next slide, the first column is if there's no R&D claim, so the business has to pay 25%, which is $25. And then progressively going across, the final column is if the business is in a loss position, and you can see that the business, instead of paying $25, would get the business would then get a refund of $43.50. So add some zeros.
On their $100.
On their $100 off, so it's 43.5% of the $100.
And so, you see here that if they're tax payable, that what they get is an $18.50 tax benefit or a saving on their tax bill on 100, so 18.5%. And then where you've kind of got a small loss, you get somewhere between 18.5% and 43.5%. This kind of arises where your tax loss is less than your R&D spend, basically. And then where you've got sufficient losses, you get the full 43.5% refund. So it just shows the sort of range of outcomes you might get.
I think we'll leave it at that. I think we did a good job on that one. Not getting too complicated in that.
If you want to go through the rest of it, we'll be here all day.
And look, and as a reminder as well, because it's not a grant, it's a tax refund. Refunds are unaccessible. They do create some issues in terms of franking credits. We're going to get quite technical when you're paying out dividends, but it's not income. So you are getting $43,500, for example, on $100,000. That's yours. It's no tax payable on that. Just maybe briefly, we go through some of the activities.
Yeah, so we've been talking about making an R&D claim. So what we're making it on is eligible R&D activities. So money we spend on activities, there's 2 types. There's core R&D activities, which are experimental activities, and they're fundamental to the whole program. So we need to understand what these are. And once we've identified core activities, we can also claim our supporting R&D activities, which are directly related to core activities. So we've got to have a core activity to have anything. Then once we do, we can also claim support. So 3 key kind of criteria we need to meet for a core R&D activity. So firstly, the purpose of the activity should be to acquire new knowledge, and that typically is really around developing a new or improved product or process. So kind of that's key. So, at least some sort of incremental improvement over what's already out there. So that's the thing. We're doing something new or improved. Importantly, not new to the company. It's on either a sort of a reasonably accessible basis. So what's out in the public domain? So what can we find out about this subject? And if the answer isn't out there in the public domain and we seek this new answer or this improvement, then we'll qualify against this criteria. But just being new to us, that doesn't qualify. So it's new or improved. The second thing is that in seeking that improvement or that new knowledge, there needs to be some uncertainty about getting the technical outcome we're looking for. Okay, so there's an element of technical risk, technical uncertainty. So at the minimum, minimum level of technical uncertainty we can deal with is, as a competent professional in this area, I am confident we'll get the right outcome, but in practice, I need to work through a few different options to work out how we're going to get there. Anything less than that, we're not going to meet that technical uncertainty criteria. So routine problem solving, for example, won't qualify. So new or improved, technical uncertainty, and then the third thing is we need to address that technical uncertainty or that technical gap with a systematic progression of experimental activities. So some testing and trialling where we have an idea to solve our technical problem and we run some tests to work out whether that idea works. observe the outcomes, draw some conclusions, maybe go back, tweak the solution or the idea to make it work better. And that's it. So if we've got those three criteria, we probably have a core R&D activity. So that's the key thing.
We're actually saying 1, 2, and 3, so it's an and.
Yes.
Absolutely.
Yeah.
Every one of these has to be met. If you fall out of one, it's all over. You don't have an R&D claim. You can move on with your life.
And with the scientific, again, it's not like a lab coat type, process, right?
No. So a lot of the claims are around software. So in that instance, it'll be about, can we deliver some significant new functionality in our software program? Create a new algorithm to perform some function, and then you run some tests of that algorithm. Doesn't quite work. You refine it, test again. That's a typical sort of one. And we do have lab coat stuff as well.
Well,
we have life sciences,
if it is relevant,
and medical
yes.
and pharma. Yeah. And then on the manufacturing side, you'll often see you'll have process engineers and guys, mechanical engineers who are working with equipment to make their widgets, and they want to make that process better. It probably won't be in a lab. It'll probably be in a dirty factory, but still, it's technical and it's engineering based.
Yeah. My point is that it doesn't have to be a kind of the stereotypical
I haven't
setting
seen anyone in a lab coat for a while.
Oh, okay. All right. So they're core R&D activities. There's also a notion of supporting R&D activities, which
don't need to meet any of those special criteria. They just need to be closely related to our core experimental work. So this could be like supporting design, talking to suppliers about what their equipment specifications are, whether you can build that into what you're building, all that kind of planning, kind of work. Now,
so are they part of that first 3, or this is the second?
This is second. So once you've identified the first 3, and they have to meet those criteria, you can also claim other activities that have no special character.
Sort of broadens the
it broadens it out to a much wider sort of thing. So, you can imagine if you're doing an experiment on a prototype, for example, of widget. So you might hit it with a hammer and see if it breaks. That might be your experiment. The supporting work might be all the design that led to the creation of the prototype. So it's obviously a lot more expense caught up in actually doing the whole design process, for example. That's why these are important. There are some exclusions around what can be a core activity. They can be a support activity, but there's an additional test then. It has to be for the dominant purpose of supporting an experimental activity. And that's stuff like market research into humanities, social sciences. And one important thing where the dominant purpose test applies is around running trials where you're actually producing goods or services. So, if you've got a factory and you're making widgets and you run a trial and then you go and sell the outputs into the market, it can qualify as a supporting activity, but only if the dominant purpose of running that trial was the experimental purpose, not the commercial purpose of selling widgets. But anyway, so that's support activity. So that's it really, in a nutshell. That's what we're looking for. One of those 2 categories of activity.
all right.
So once you've made the lodgements, right, so you've lodged a claim.
So lodged Oz Industry, and ATO,
Yeah, so say they've rejected it.
Yep.
Can you appeal it and redo it, or once it's rejected, it's done?
Yeah, so there's appeal processes during the review. So you've got a right of internal review. And then if you're dissatisfied with that, you can appeal to typically the AAT is your first port of call. And then, you go to court, federal court, if you had the appetite to.
Yeah.
Yeah.
All right. So, because it's a rather large program and I don't want to take up
Here's
too
a
much
case study
time.
where we can in exhausting detail go through what's
there's
a core
case study.
activity
We're
and
not-
a support activity.
we will not
But
be
you can
going
read this
through.
at your leisure.
Yeah, good. And there you go. We'll go through that's a case study. Some eligible expenditure. I think we can quickly go through that. Salary costs, consultants. You can.
Yeah, other ones are, overheads, travel. They're the main thing. Materials that you consume in your R&D as well.
Yeah. I think it'd be percentage of rent or overhead, percentage of rent. Yeah, salary. It's quite broad once you.
In a software, for most most companies in New South Wales, it'll be a software claim where you're trying to develop some new software to assist. The main cost there will be software development contractors or in-house developers if you have your own in-house developers.
And there's some of the common claimants. So
Yeah, I think we touched on that before, but yeah, software's the big one, then manufacturing, and then maybe agribusiness and food, sort of within our client base.
And as I said before, it's there's a lot of overlap with the following programs. So typically, if you're in one of these industries, you might qualify for these other grants that we're going to discuss.